All right. Hello. It is Sam here, middle of the day, Monday, October 2nd. Just wanted to do a quick update here on the majors and some interesting things developed over the weekend. Let's start with Bitcoin. So we are looking at a 4-hour here on Bitstamp, and this is the chart we've been using kind of for the larger trend perspective. And so far, we've seen the market respond very much as we would have expected, right? So we are still kind of working from this assumption that we've got a very large A in. We're putting in an ABC of a larger B here. So in that case, given the ABC context, the expectation was for an impulsive wave here, and that's exactly what we've gotten. Now, keep in mind that while on the larger time frame here, we remain cautious about the possibility for this larger C wave to develop. Until we see evidence of that, we've got a really nice impulsive wave here to trade. So just because we maintain a cautious mindset with regards to where this could ultimately go, doesn't mean there aren't good trading opportunities certainly within this impulse or any impulsive structure, whether it's part of the larger trend or counter to the larger trend. We still don't know if this is going to unfold. And from an Elliott perspective, that remains I wouldn't call it the most likely, but certainly it's a contender that we have to be aware of and look for signs that we're starting to move in that direction. So let's just do a quick update. So I'm going to just keep this off to the side as a reminder of what we're cautiously looking for should we start to see the market correct here. Now, take note here, we are hugging the median line here rather nicely here on this impulsive structure here. So this was a point that we reviewed, rather carefully as we hit that pocket between the 618 and the 65. We got a reaction from that. We pulled down, and then we're now unfolding impulsively. So you've got to go over to a much smaller time frame. So let's take a look at it over here. So this is the 15-minute. 15-minute here, and I've got this now on Kraken. So this was, really just a textbook Elliott wave trade. Right? This is not rocket science. You don't have to be an Elliott expert. You could have traded this without an Elliott wave count, just on fib pulls. But with a little Elliott knowledge here, we had a very nice ABC come down into this little pocket here. And if I put the fibs on it, right, so here's our wave too low to our wave high. So some of you may have seen I posted this up on TradingView over the weekend. Just as sweet as it could be. I mean, there's the box right there. We know our most likely entry zone for wave 4, if we're going to see a wave 4, is between the 318. The 38.2 and the 50, and we come down. We get right into the middle of it. So there was a first entry here on the 38, which was aligned with this wave 3 high, giving it structure, ends up being the structure for the A wave. And then we come down for the 50. There's the 200 period right there as well. We get a tick or two through it, but then we've had this nice reaction. So despite the fact that we are anticipating or staying aware of the possibility that we might top out here in a wave C of a wave B, this was, that's what do we, so entry here, let's split the difference here at 42.70, and we got up to the 44.66, so not almost a $200 trade. That's a nice looking trade, really nice looking trade. So now we're starting to see some correction off of that. Now you can look here. So from this 50, here's our 23. We got a little reaction there. We've gone up a little further. So I'm going to put the alternate fib price projection on that, so you can take a look at it. Here's our negative 618, which we know is a market that's moving at an extreme. That's a likely target for it. So we can look at, let me just show you where I pulled these from, so I'll take that off. And there's our, let me just clean it up for you. So we have, whenever we're looking at a 5 wave like this, let me reset. We always want to look for a relationship between the 1 wave and the fifth wave. So we want to measure and see if the market's responding technically. Now, so what I've got here is, I guess I'll draw it so you can see how I'm doing it. So I'm using the alternate price projection. I'm taking the length of wave 1 to the wave, or pardon me, the start of wave 1 to the wave 1 high, and I'm projecting from the wave 4 low to get a relationship between wave 1 and wave 5. Now, the most common target there, or a place to be anticipating the market to move to at a minimum, would be 100% of the relationship of 1. Right, so that's a very common reaction point that you'll see in the market, and we get right to it, and that ends up being the wave 3 high here of this fifth wave. We get a reaction, and that's what starts the ABC for the final push up. So we were, at the same time that we were aware of this 5-wave sequence here unfolding in Bitcoin, we were looking at this on the hourly. Once we started to subdivide into a nice 5-wave sequence here, we went to the 15-minute, and that's how we found this trade here, anticipating an impulsive structure in the fifth wave. So this is just as textbook Elliott as you can get. I mean, this is rudimentary Elliott analysis. The market is just performing spot on. You almost can't script these sometimes as perfectly as they end up coming out. So nice little trade here. Again, rudimentary analysis puts you in that trade, right? Stop. Look. So you had the 38.2 and the 50 here. You had the wave 1 high here as a potential stop, and so you were in with a 4-to-1, 5-to-1 risk reward. Now we've gone up. Now take note. Now we want to do the exact same thing on the smaller time frame. So we've looked on the 60-minute larger time frame. We looked for the relationship between wave 1 and this wave 5, but we want to do the same thing on a smaller time frame. Remember, it's waves within waves. So there's the wave 1 low to the wave 1 high, projected from our wave 4 low, looking for that relationship. And here we can see it, right? So now here's the 100% of this wave 1, right? And we go right to it, and then we get a little bit to the 1272. So we've got a little cluster here of fibs implying that potentially we might see a reaction there. Now, we don't get to the top of the channel. So I'm going to take this one off. So now we're looking just at this final fifth here. All right, so we go right to the 100%, go through by a few dollars. There's the 1272, which is what we wicked on the hourly. So now we've got potentially a completed 5-wave structure within a 5-wave structure within a larger ABC. So is that the top? Well, we don't, no way to know yet, but we can start looking for evidence that at the very least we're going to start correcting this. So obvious fib pulls would be go from low to high of this final wave. We want to see, is there a reaction there, and see, do those line up with any previous pivots to give us some clue as to where we might see a potential reaction, because there's always the possibility that we're just moving higher on a larger time frame. So if I go back to the 4-hour and look at this, well, is that our top and we start moving down? Just will not know that until we start to see evidence of either impulsive wave structure on the way down or a diagonal implying a wave 1. We just aren't going to know. But right now, the market's responding very technically. We're hovering right here. Now take note of where we're hovering. Here's the low here to the high. We went to the 50, went through a few dollars, and now we've gone right to the negative 23, and we're sitting at the median line. So, that's a likely target. That's a likely point for algos to take profit. Is that our swing high? Again, we just don't have any way of quantifying that until we see more information. How does the market respond here? But this could, for all we remember, these are only possible scenarios. So if we look at this and say, okay, well, here's our first wave structure. We went to the 50. Now we've gone to target. What would we expect next? Well, the next thing, of course, would be we'd just repeat the process. So we'd go from this swing low to this swing high. And the next thing we're going to look for is a reaction here at this 50. And that, we might have to unfold here in some sort of a impulsive or a five-wave structure, whether impulsive or diagonal. But that's going to be a critical point. And look here, we had prior support last time we came here. So it's going to be interesting to see what happens here, because potentially this count could be incorrect. We don't know. This ABC may be invalidated, and this may very well be just a 1. We're going to set up a 2, and then we just keep going higher. Right? That's what bulls want to think, is that this is potentially just a 1 wave. Now we're going to retrace as we'd anticipate. Common target for a 2 wave would be between the 50 and the 618. So this is an important reaction point. If we start to head lower, we got to see something happen right here for us to maintain that bullish bias, or potentially, we're just in the middle of this. Now take note of that, right? So reaction, then again, we got to evaluate the reaction there. Then do we head down and complete this larger C wave here that right now remains a real contender in terms of future outcome? We just don't know. So as a trader, we know that's a possibility. Right now, where we can get some advantage and create risk-reward opportunities that are friendly for us is on these smaller time frames. Now, I encourage people to not go below a 15-minute. You're subject to too much noise, too much random movement, and there's less advantage, less statistical probability for you to find trades there. Too easy to get wicked out, too easy to get emotional. It's simply not a great time frame to trade off of. And there's usually not enough money in it, so you got to trade larger size to make it meaningful, and that makes you vulnerable to over trading, to emotional trading, to getting wicked out on little aberrant moves. So I encourage you to keep the 15 as a minimum. So here, and you can see, here's case in point, right? So here's a nice trade with a moderate amount of risk, right? You could have traded a bit of size there. And then we get this beautiful move here. Now, what's next? Well, if we're bulls, we just can keep continuing this process. We pull from low to high, and we look for a reaction at the 50. Well, here, this I don't want to confuse you. That's the 618 of the alternate. So we've got this nice channel here. Here's the 50. Here's the 200 period. Is that a trade? Potentially. Well, what we'd rather see, right? This is where it's a question of how particular are you on what you look for when you enter the market. So ideally, we'd get an A, B, and we'd see a C wave extend beyond the B wave, as we did here. And here's a place where Elliott can be really advantageous, because when we see this first move down, we're not jumping on the buy there, because what we're looking for, knowing and expecting the market to correct in a 3, we'd be looking for the B wave. And some people can say, well, there's your bull trap, right? So there, we start to be buyers there if you're, kind of trend following, if you will, or you're looking for breakouts, right? And that's the bull trap, and then it comes down for the C wave. People that ignore Elliott tendencies are often caught there on the wrong side of the market as it comes down for the C wave and just holds the larger 50. Well, there's the perfect entry. Now we get a big reaction here. Now, what we want to look for, so a couple of things here. Here's the 200 period sitting right here. Here's the 50 of this low to high, if I've got that dialed in. Okay, so ideally we'd see some sort of a C wave that might put us down here to the 618, might put us here at the previous B wave high. We've got some contenders here. So, do you want to wait for what you're comfortable with, or is that close enough for you to take the trade? I'd tell you, because we've got this nice 5-wave structure that was technical on the top, even though we didn't get to the top of the channel, I'd be cautious there until I saw more structure here that I could, again, remember we're on a 15-minute here. I'd want to be a little more picky about what I was looking at for a long trade, knowing that potentially here we could have a top in. We could. We could. So approach with caution there, and when in doubt, go back to the larger time frame. What do we know? Well, we've had a 50% retracement that went to the negative 23.6, hit its target right at the median line. Do you want to be a buyer up there? That's up to the individual. I would tell you approach with caution because we certainly have this possible scenario to unfold. So I cautiously bullish here, but very cognizant of the fact that we're at a likely spot to see a reaction. Okay, let's wrap there. That's a lot on that's 15 minutes on Bitcoin, but that we're all watching it, we're all trading it. It dictates what happens in the markets for the most part. Let's do a quick update on Ethereum. So not as pretty here, not as pretty. Right, we did not get that fifth wave move that we got in Bitcoin. We have is this a 1-2, another 1-2? Hard to say. I'd like to see this a little closer to the median line. This is a good point to show you a couple of differences on pitchforks or Andrew's median lines. So right now, let me highlight this. Where's my? That's what I'm looking for. My little cog here. Okay, so I have on here. There are three types of median lines that you can apply to the market. One is the original. Okay, now we look here. The original is too steep. Right, so we're way over here, but that doesn't mean that this median line, that these major pivots aren't influencing the market. So what we can do now is let's re-highlight that. Now we have two variables to play with, and Schiff was one of Andrew's students who noticed that if he moved the median line 50% forward in price from this pivot here and drew the median line, that often when the original was too steep, that this replacement here at 50% of the wave of this low to high, simply 50% of it to the median line, that when the market was too steep would contain the market's reaction and you maintain the dominant pivots. Right? So that's just 50% up from this low to high, those dominant swings. Now, if I highlight it again, we also have what's known as the modified shift. Now, the modified shift takes it forward in price and time. Okay, so a nuanced difference here, but not, you want to check them both, see what's holding the market better. So now you see what we've done here is we've gone up that same 50% in price, but now we've gone over 50% in time. Okay, that's the only difference between the two is the modified shift adds the variable of time. So it's taking this distance and splitting it in half in time and taking the distance in price, also splitting that in half. There's the 50 and it draws the median line there. And off as was the case with Bitcoin at the top, that can tick the market just perfectly. So here I've got the shift on. So let me put it back. So I've got modified shift, and you can see what happens when I go to the shift. Right? So we go just to the time, or pardon me, to the price-based 50%, and that gives us a little bit more containment. Here's the 100%, here's the 150%. So looking at this, we have not gotten up to these targets like we did in Bitcoin. So could this be a 1-2? You don't have enough data to know yet. So what do we know? What can we say with certainty? Well, we've had a 50% move here, and we have not yet gotten to the negative 23. So, in fact, I've got to draw that again for you. So if I go from this low to this high, here's the 50. Here's the 23, right? So it always lines up with the swing low you're pulling from. There's that negative 23. We are not there yet. Okay, so we maintain a bullish bias until we get there, as we know algos will be looking for that as their profit target. Now, we've also got the next swing low to high. So we go from, here's our 50 here, and you can see the reaction from that 50. We have not gotten there yet. So this is why I have this little cluster up here as potential targets. We've also got the 618, that little window between the 618 and the 65, all lined up here with these negative 23s. So that's a target we want to pay attention to, and until we get there, we'd be bullish above these 50s. So, is this a 1, 2, 3? It's, you can't count it yet until you get more information. But it almost doesn't matter. Remember, when in doubt, you go back to the fib pulls. What do we know for sure? This 50 hasn't hit its target. This 50 hasn't hit its target. Those targets are up here around 325 to 330. So until that happens, until we see the market get there or start breaking the 618s on the way down, where we know we had some sort of a failure move here and we didn't get those highs, and now we're starting a trend down until we see evidence here of this moving impulsively to the short side, we just pull fibs and look for reactions at the 50. So if you're a bull here, we'd go down to, let's take it down to the 1 hour. And I know there's a lot of information on that. Okay, so there's the 50 that we hit. We have not gotten to new targets. Let's draw it again. So from this low to this high, well, we're hovering at the 38. So is there a trade here? Well, it's one to watch. You'd want to look for that ABC relationship. Is there going to be a relationship between A, B, and C? Well, take note. This is interesting. So the 100%, if this is our A, this is our B, and we're looking for a C, I like to see this kind of action here when I get that kind of confluence, particularly since we're talking about 50 and 100, which are, by the way, not fib numbers, but they're so pervasive in the market, we kind of lump them in with fib draws. When I see that line up there, that's a good sign for me. So that's a trade to seriously consider. So what kind of risk reward do we have on that? So if we're a buyer here and we know we've got targets up here, if you're trading on this time frame, you place your stop on that time frame. That's just below the 65. So first target gives you 4.25 to 1. It's not a bad trade. Upside, there's our larger target. There's our larger target. If we're going to go up and hit our expectation there's the negative 618. Now we're at 5.2 to 1. There's the larger negative 23. Now we're at 6 to 1. Is that a trade? Hell yeah, that's a good looking trade. Because we're bullish above this 50. Here's the next 50. We stay bullish. Here's that 50. We didn't get there. Note how this pivot became the support here. Could this be a 1, 2, 3? Well, it looks to me like that. If that's a 3 wave, it's going to be very close to the distance of 1. So my expectation is we come down one more time. What the Elliott count ends up being, is that critical to me right now? No, not until I get more clarity and I can see it easily. Right now, this could be too many things. After the fact, we'll come back and we'll label this and we'll go, of course. But right now, we don't know. So you work from what you can see and you focus on the risk and money management. Can I put on a good trade there with structure that's based on pattern, price? Do we have the continuity? Do we have the right relationship in time? Does this look like it's would set up nicely in the context of how these swings are moving? Yeah, that's a nice looking trade right there. Nice looking trade. I like this overlap of the 100 and the 50, reasonable amount of risk. So your entry here at 293, stops at 287. Right? I mean, that's a decent looking trade. Decent looking trade. Any help from the oscillators? Well, you can always put your favorite oscillator on there. So I might look for I could just use the wave trend, see if I've got, if I can get it to come up for me. There we go. We come down here. Nice. Nice. Do we get do we create the energy potential to go from low to high on the oscillator? Here we had it here. Look how nice that was. Come down, we get just below it, and then we get that energy potential. We go up to the red. We go up to the, theoretically overbought zone. Very nice. We don't get there here. We don't get there here. It's a more shallow retracement. So maybe we need a deeper retracement. So, that can be a timing factor for you to consider. You know me, I will look for a reaction because I don't want to just be sitting there. I don't want an entry just sitting there because that could just blow right through it. I want to see the market get there and I want to see a reaction. I want to see it stall. I want to see some sign that there's indecision there and likely algos are starting to buy. All right, so I can take that trade comfortably knowing the risk is moderate and the upside is great. Is it a winner? No way to know. No way to know. But all the criteria that I would look for is there. And if that breaks, well, then we got to reevaluate and say, are we starting to move impulsively? Is this a 1-2, and now we put in a deeper 3? How do we measure it? Well, we know the likely targets for a 3 is 168 of the length of wave 1. Can we now go, oh, maybe that's a 3? Now we're looking for the retracement for the 4. We're moving impulsively. Now are we starting that larger correction? Are we now starting to move back towards where we started here as a potential? Is this the B top? Is that the B top? And we start to move down here. Is this the count? Could be. Could be. No way to know just yet. Right now, all I can see is fibs pulling 50s and trading 50s. Seems to be how the market's responding. I got 2 in a row. Now, if that starts to break and I take out the 618, then that's a red flag. Caution. Caution. All right, that's 26 minutes. I'm going to wrap this video. I don't like these to be more than half an hour. So I'm going to wrap this. I'll be back with another video. We'll look at Dash and a couple other contenders that are on the move. Okay, that's it for now.